I'm making this video because I want to talk about something that I think is quite important, and that's the aspect of calling tops. And so I actually have some lessons here. This will be a quick video, and I don't know how many people actually find this interesting. I really don't. But what is a top? A top is essentially you or someone else trying to say the market is going to top out here. It's going to crash. It is an extremely difficult thing to do. Markets have been open for hundreds of years. It's kind of a theme of the videos I make on my channel, actually. And let me just hide this text here really quick to show you something, actually. And what we're going to do is just look at the Dow Jones Industrial Average. If you don't know, that's 30 of the largest companies in America. And this chart might show you something that I think you'll find interesting. And let me really make sure you can see the full chart, and I'm not blocking it. So this chart, as you can see, shows the Dow from the late 1800s. Markets have been open a long time. And you could have called a top at some pretty epic moments. For example, called the top right here. But sure enough, you would have had to call another top here. You would have had to call another top here, and you would have had to call another top. The point is that the trend over the long run has really been, you guessed it, up. So when you're calling tops, you have to know your time frame, meaning this top may not last that long, or it's going to be really hard to time it perfectly. And at the end of the day, people are trying to build for the future. Markets are a function of trying to fund that future or keep that future alive. And so it's really hard to bet against. You really have to find moments of pure madness, pure mania, if you're going to get it. This was the Great Depression when markets dropped 90%. Ouch. That is really rough. Additionally, you can kind of see how long this lasted from the bottom. Oops, let's actually do this date range tool. And you can kind of see, it took a few years for it to really recover. But if you zoom in, what you'll find is once it did bottom, that was kind of it. Like this was the bottom here, and then the rest of the time was it recovering. Sure, it took time, but it was the recovery process. And that's the thing about markets is like I was saying, they're a function of the future. People betting on the future. It's really hard to bet against the future, and that's why calling tops is so hard, and that's what this video is about. Also, have you ever wondered why there are so many headlines out there from people, I'll give you an example. This strategist calling the top. A market crash is coming. Impending doom is up, right? You get it. These articles are everywhere. They are published constantly. Videos, you name it. It's because everyone wants to be the hero. They want to call tops to be the hero. I actually write this in sort of my lessons about tops, which is it can really show serious expertise. Very few people have managed to call a top successfully, and when they do, it shows expertise. You may know Michael Burry from The Big Short. He was someone who did that. Funny enough, he called The Big Short squeeze too with GameStop. But calling tops sells. It's also a selling point, that fear-mongering. It gets people looking, clicking, reading. Oh my God, all my money's on the line. That's a thought process people have. So now let me just dive into some lessons about calling tops. And if you have any questions or comments about this, I'd be so curious to hear it. Let's just dive in. First of all, if you are calling a top, and I've tried before, this is a note I want to make sure is important. It shows serious expertise, and if you get one right, it can be lucrative and you can protect your portfolio. So if you're going to call a top, there is a reason for doing it. You can show off your skill set if you think you have it, and you can protect your portfolio. You can actually make money calling tops. But to call a top, you have to kind of understand a few key lessons. I believe. I could be wrong. These are my lessons, so you can tell me what you think in the comments below. Number one is tops take time. So if you are thinking that the market's topping, if you do think there's too much euphoria in the air, like that 1929 example I just showed you, or if you think perhaps you think that there's just too much mania, we've gone too far too fast. Another example of that would be the tech bubble. in this chart, I'm just going to show this over here. This is the tech bubble. As you can see, I'm zooming in. Here's the year 2000. Markets really spiked higher and sure enough crashed right down. It's a notorious moment in market history. Companies with no revenue, no earnings, just a domain name, pets.com, were trading for hundreds of millions of dollars. It was pure mania. And sure enough, the top happened. And there are moments then when calling a top makes sense. You're trying to protect your capital. You're trying to even potentially make some money on the downside or hedge yourself. This was a more than 80% drop during this tech crash, this dot-com crash. And that's the reasoning. So there is a reasoning. But they do take time. And if you look at all of the great tops in history, what you'll find is that they take time. They happen suddenly. In fact, let me write this down. They take time, but more importantly, they happen gradually and then suddenly. And this is a really important component of tops. Let me add some spaces here to make this easier to read. This is a really, really important component of tops. They happen gradually and then suddenly. And by that, what I'm trying to say is if you look back at some of the notorious tops, like this dot-com bubble top, if you measure the time that this took, you can kind of see that actually this is 275 days. I'm on a monthly chart, by the way. So this is a monthly chart. It's very compressed. If I went to a daily, you would really see it spread out across the chart. But the dot-com bubble, this region here, is 275 days compressed into a monthly chart. That's why it doesn't look like that much, but that's 275 days. It took a while. It happened gradually. You can kind of see it hit this high here, then this high, and then suddenly it just happened. So if you are calling a top, remember that they take time, they happen gradually, and then suddenly. To me, that's lesson number one. And in fact, I forgot to put lesson number 2, I guess, which is something I talked about, which is calling tops sells. It generates clicks. So you'll see all these fear headlines. Fear sells. The big market crash is coming. You have to remember that calling tops sells. You're going to read or hear about it all the time, but just know that a lot of the times it is literally just a selling process. So some other lessons that I want to get to before I wrap up this video. And by the way, thanks for hanging in, and I'd love to hear your thoughts about calling tops and what it means. The next one is something I did discuss earlier. The trend is up over the long run. The trend is up over the long run. You may remember I just had this chart open of the Dow Jones Industrial Average going all the way back in time, even to the early 1800s. And if all you have to do is look at this chart once. I'll leave this chart up for a second so you can just stare at this. This is over 100 years of price history. A lot has happened. America has changed a ton over all these years. Technology is just game changer of what it's doing now. Imagine showing an iPhone to someone in the early 1900s. Imagine what they would say if they saw an iPhone. Or if they even just saw the stove and the oven and the couch you have now. It's like mind-boggling, and the trend has been up. Period. It has just been up. And so when you're calling a top, this is something you have to remember. You are betting against a very difficult trend, or in some cases just an inspiring trend, and you got to keep that in mind. So as we go back to our lessons about calling tops, let me get back to this. We can just quickly review. They take time, they happen gradually, and then suddenly. Calling tops sells, generates clicks, fear. The fear sells, it gets your attention. 2, the trend is up over the long run. So if you are going to call a top, and what we can do actually is go into a daily chart now and switch this to candles. If you are going to call a top, if you think the next big crash is coming, oh my gosh, markets are fun, you get the idea. Well, just know that the trend is generally not on the downward side. The trend is not saying that this is going to continue downward for the next 100 years. So as you're calling a top, I guess the lesson is know that the trend is up and be willing to change your mind when the facts change. So even if, for example, this chart and price action now tops and fades over, well, something could happen that may bring it back up, and you just have to be willing to work with that. More importantly, if you plan ahead and maybe lay out a level, hey, you say to yourself, this market is way overextended, it is exuberant, it is a bubble to me, but that means there's a fair value in your eyes. So you have to find that fair value wherever it is. And if you believe the trend is up, well, I drew those circles sort of as like bullseyes. Be ready to, when it enters your bullseye, be ready, because that's the fair price you expected. So when you're calling a tops, know that there is a price everyone has that they would buy at. What's your price? And mark that down, and maybe if you get it right, it'll fall right into your breadbasket. That's right, your breadbasket. So I think that I've lost my lessons here. Let's see. Here we are. We got our lessons. And one of the last things that I'd like to discuss about calling a tops, about calling a top gradually, and then I have to add these back, it appears. I lost it. The trend is up over the long run. Is the next, and then let's also do this. This is a really important one. Fear sells, crashes sell. And by the way, crashes sell. I mean, they make movies about crashes. The Big Short is a movie about a crash. Something to keep in mind. This next quote I think is great. A lot of people have said this, and it's worth saying again. It's not the exact quote, but there's this idea that more money has been lost preparing for crashes than has actually been made in crashes. Meaning so many people have prepared for crashes. So many people have tried to time them. And the trend kept going up, and they ended up losing money on that top. So it's really important to keep that in mind, that people have tried this before, and a lot of money has been lost trying to call tops. Now, why am I making this video? Because this point I'm circling here is something I want to talk about, and this is good because this is why I'm making the video in the first place. Calling tops is kind of fun, and if you're a trader, if you're an investor, if you're managing your own portfolio, calling a top can be fun, and it can be something that, this is what you spend your life doing. You follow markets for a living. And when it's said like that, well, this is something you prepare for then naturally. Otherwise, why are you doing it? And one more aspect I will add, I said this earlier, is it can show expertise. Michael Burry did it. A few others have done it. And if you can do it, it will help your portfolio greatly. And here's one reason why it will help your portfolio, just as a quick demonstration. Generally, the majority of people are long, so when markets go down, their portfolio goes down. Pretend this arrow is actually their portfolio. By the way, this is just an example because it's all about outperformance. Markets are competitive. But if you are prepared for a top and actually get it, you will have one of the few portfolios that does this, that goes up. And that's how you show the expertise, how you outperform the market, how you compete. It's all part of the game to some degree. And it's something to keep in mind. That's why people try to call tops. I know some people can't stand top callers or those who bet on markets going down, but that's the reality of it. It's a competitive marketplace with hundreds, if not thousands and millions of buyers and sellers. And everyone's trying to outperform everyone else at the end of the day, and that's a reality of markets, and you have to keep that in mind. So I hope that you enjoyed this video, and I hope I got enough across to talk about tops. Once again, what's really important to me is what you think of tops. I'd like to hear your thoughts. Everyone has been there or read some crazy crash article. The next big crash is coming. Prepare for the crash. And I just want to hear your thoughts. If you've ever tried calling a top, if you've ever thought about them incorrectly and lost money on it, like me. By the way, I've tried calling tops before. I've lost a ton of money on it. And that's kind of how I've learned. So I make this video actually, and I write down these tips, and I'll put these tips actually in my video description because I want to share some of this. And as I start my YouTube channel, I like the idea of really holding myself accountable and putting it on video. It's me to internalize it, watch these videos whenever I want. Ideally, someone comments on this and shares their feedback. That's even better. And that's all out there. So thanks for watching, and please subscribe to my YouTube channel, leave a comment, and I hope you enjoyed these quick lessons.